investors. I have one of the better tacticians and one of the most disciplined investors that I've spoken to in my career. And I've spoken to hundreds and hundreds of traders, analysts, and Larry really has a discipline that he sticks to. So, Larry, welcome back. I know you're probably having a pretty good run because I'm familiar that you're a very disciplined trend follower. And when you have something working, you're able to sit with it and let it run. Whereas most people, they have quick profits, they take it, and then the windfalls happen without them. That happens to me quite often. I make the tough money, and now I leave a piece on. But, we want to find out, and I think it's probably happened over years, how you do this. But I know a lot of your followers, subscribers, and people on financial media probably want to know how you got from point A to point B. So I'm going to take you into like outer limits. I'm going to take you into a time machine
Okay.
and tell me, like, say when you were in college, early 20s, what were you thinking about doing, and what was your first gig in the industry? What attracted you to the markets?
Dale, thank you for having me back on. So my
Great.
journey goes all the way back to when I was about 10 years old. So my mother worked at a stock brokerage firm. Back in the days, it was called Shearson Hayden Stone. This
Know it.
pro Yeah, this probably
Yeah,
goes back to 1976. She
yeah.
worked at the firm, so sometimes after school, I would have to go to the stock brokerage firm. She'd pick me up from school, take me back there, and I'd have to wait. So what would happen is I'd see all these guys running around. It was, the old school 70s brokerage house. It was organized chaos.
Yeah,
But the guys were
bullpens.
all wearing suits. They
Yeah.
had nice offices. I'd look outside and see Porsches in the parking lot. And it just at a very young age, I said, I
Yeah.
don't know what's going on, but this seems pretty cool, right? So,
Yeah.
so I would befriend the brokers. I would just hang around the office, and I didn't understand anything. But at a very young age, I saw something that looked very electric, very exciting, something that I wanted to do. So as I was going through high school, I was a lot of fun at parties. As I was going through high school, I was reading books on investing. I'd watch Louis Rukeyser. My stepfather
Okay.
was pretty high up in the brokerage firm. So what would happen is I just got interested. When Wall Street came out, I think it was 1987 or 88. Gordon Gekko, and I
Yeah.
went, I went to see that, and I thought, hey, this is what being a stockbroker is about. So I was interested. I went to college for finance. I didn't finish college. Unfortunately, I spent my tuition money on my rent, things like that. But I got interested at a very early age. I got serious about it 1996, 1997. I I started to really study it. I got hired by Merrill Lynch in 1998, passed my Series 7,
Yeah.
started their PDP program, and I loved it. And the good thing, so I got my number in 1999. So I got into the market just in time to be a genius. So I got into the market. You remember 99.
Yeah. Yeah.
Everything, Home Depot was probably up 50%, GE, Pfizer, all the tech stocks. It didn't matter what you bought, you looked like a genius. I said, hey, this is easy. This is going to be great. And then the year 2000 came around. I got caught at the top like I think everyone did, or a lot of people did. And then over the next 2 years, I lost, all my trading money that I had. So, long story short, after I survived 2000 to 2002, and I licked my wounds and I said, okay, I lost all my trading money. I don't have any money left. The brokerage business was very tough because the NASDAQ went from like 5,000 to 1,000, right?
Yeah.
80%
Yeah.
drop over 3 years.
Yeah.
So, anyway, I lost all my trading money. but I was still fascinated, and I quit trading on my own, but I was still fascinated that I had to learn how to do this. And I think between the year 2000 and 2004, I probably blew up two or three, of my own trading accounts. But I didn't give up. But what I wanted to do, I looked back and I said, okay, I held stocks like JDSU, wrote them down 95%. Nortel Networks, I wrote that down, 100%. And I said, okay, what did I do wrong so that I can stop doing that? So that led me to technical analysis. I studied a lot. I read a lot of books. Anyway, so I came across moving average.
Which book would you say had the most impact on you of the
Going
book?
back, I would say that the initial book was a book called Trend Following by Michael Covell. And I think I
Okay.
got a hold of that in 2004, 2005.
He's
The
one of the wizards that Jack wrote about.
Well, yeah, so Covell wasn't one of the big traders, but he studied all those guys.
Yeah,
And so what that book taught me is that there were CTA firms, these big fund managers that were trading just off technicals.
right.
They were trading off trends, no opinions, no, quarterly statement, quarterly earnings reports, things like that. And then I read the most impactful book on my life was the book about Jesse Livermore's life, Reminiscences of a Stock
Yeah,
Operator. That
yeah.
was the most impactful book on my life because when I read that, there's a page in that book, and I post it often on my Twitter page. And there's a page in that book where Livermore says that he realized that he would buy stocks at the exact right time and he would sell stocks at the exact right time and often make no real money out of it whatsoever because he was trading in and out, jumping in and out of positions. He was trying to catch every tick. And I said, hey, that's me 100%. I would buy a stock, it would go up 3%. I'd sell it, and then it'd go up another 50%. And I
Yeah.
realized I left all this money on the table. So between those two books and a lot of other things, I did a lot of back testing. I spent a lot of money. I think I spent $3,000 on a software program back then to do back testing. And I just came across moving averages. And what
Okay.
I realized is when I blew up all my trading accounts, I realized if the only thing that I did was when my stocks broke
Right.
below that 200-day moving average, if I just sold them and I didn't buy them, I would have had a whole lot more money. So that's basically how I came about, technicals and trend following.
Yeah, I mean that's a great story, and people don't understand. They look at you now, and they don't understand what the journey is like. God bless the broken road that led me right to here. It's not easy. Uh, People are always trying to sell the secret to trading,
Yeah,
and the secret is there is none.
right. There isn't.
It's just hard work, and it's a lot of screen time
Yep.
and living through adversity, which your testimony says you did plenty of, and I did as well. What's the spirit that kept you going?
It was a passion. It was a passion for the markets that I had since I was a kid. And I would blow out and then I wouldn't pay attention to stocks at all. And then one day I'd click on the TV and Bloomberg would come on or CNBC and it would
Yeah,
get me right back in. But I was determined that I was not going to fail. I was going to figure it out no matter how long it took me to figure it out. And, figure it out for me, not figure out the world, but,
right.
just find a process that I can follow that works for my mindset and for my time frame.
You could check out, but you could never leave. Hotel California.
That's it.
Once it's in your blood, it's almost like we're made men. We're in the mafia.
That's it. Once it's in your blood, and I'm not a quitter, so I got beat up a lot in the markets. If I had to guess, I think I probably lost somewhere between 60 to $80,000, in those first, 4, 5, 6 years, just getting beat up. But the key thing for me,
That was your college education.
Yeah, yeah, there was my college education. That's exactly right. But the key thing for me is I would make a mistake. And if I kept making the same mistake and it kept costing me money, I'd analyze it and say, okay, you know what I figured out is there's 5 things that I do right in stocks and there's 10 things I do wrong. If I can stop doing those 10 things that keep costing me money and
Yeah.
I'm just left with the stuff that I do right, I should be okay. And that's what I did. So I looked at what were the mistakes I kept making, over trading, buying downtrends, things like that. What were the mistakes that I kept making? If I could eliminate those, I should, have a chance.
Right. And the biggest mistake investors and traders make is they don't have a plan for getting out. They haven't defined their risk. I preach that people use stops because a lot of people, myself included, when I would use a mental stop, at times I wouldn't have the discipline to
Yeah.
execute. I'd say, oh, and I know if I have, hundreds have said, I'll watch it a while.
Yeah.
Those are real costly words. I think I'll watch it.
That's like
So,
saying I'm going to put on my seatbelt once I get into a car crash. You know what I
exact, good
mean?
metaphor, bro. That's a,
Stops stops have kept me in business because what I do is every time I take a position, right? I set my stop right away. It's a hard stop
you put one in,
in
there's
the
an order in
computer.
there. All
It's in
right.
the computer, GTC order,
Right. Okay.
stop if it, and it's a stop market, not a stop limit. So if it trades down to that price,
Yeah.
and what I know, because I might have 20 or 30 stocks at any given time, right?
Yeah.
So what I know is if I buy a stock at $100 and it trades down to let's say $90, because I use a little bit wider stops because I'm a trend follower. But if I
Right.
buy a stock at 100 and it goes down to 90, then I probably was wrong about something, my timing, the
Yeah.
chart, the market, whatever. So if I take my loss small, I can get out, I can reevaluate it. You can always buy it back. But what happens is once you get into a loser, and you get locked into that thing and the losses start to pile up. It's like you said, you're like, well, I don't want to, take this loss now because I think it's going to come back, right? Then it gaps down the next day. Now you got a bigger loss and you say, well, I can't take it now because I could have sold it yesterday, right? And it's a mental game. And I
Yeah.
think
It's all in our heads.
if you just say, listen, I've got a 50-50 chance when I buy a stock. It could be a big winner, it could be a loser. I don't know, but I'm going to put my stop in and I'm going to let it go. And then this way you don't have to sit there all day and look at 20 or 30 charts and try to figure out, what am I doing?
The other, I think, emotionally costly thing about sitting with a losing trade is that most people, and when I say most people, everything I've seen others do, I've experienced it. So when you're in a losing trade, you become risk averse because that trade isn't working, and opportunity after opportunity just pass you by because you don't feel like you could assume more risk because you're in a grave.
Dale, that's one of the best examples that I've heard and I've lived through that because yeah, when you're getting beat up in a position, you're like, well, I'm not going to buy another stock because I'm already getting hammered in this one. And then the
Yeah,
one that you don't buy, takes off. When I'm in a loser, if I've got, let's say, 15 winners and 5 losers, I'm more focused on those 5 losers, right? Because that's
yeah,
where my downside is. And when I get stopped out, I'm actually relieved
yeah,
because you're like, all right, I've been looking at this stock every day. It's just been ticking down and ticking down and ticking down. Now I'm out of it, get a clear head, reassess the market. And yeah, I think stops are a must have for anything,
yeah.
you know?
I had a manager when I first moved to LA that told me stops. He goes, Dale, it's like you can't drive a taxi without getting a few tickets now and then.
Right.
So
Right.
it's a ticket, but they
Yeah.
don't repossess the cab.
Right. That's exactly
Okay.
there's no
You still have
business
a cab.
yeah, there's no business in the world, right, where you don't have some type of losses. I don't care if you own a restaurant, if you own a gas station, if you own Goldman Sachs, there's no business in the world where you're not going to accept some type of reason, restaurants, right? At the end of the night, some food gets thrown out, right?
Yeah.
Whatever happens, so you have to treat trading and investing as a business and say any business in the world has risk. How do I manage that risk so that I don't go out of business? And then once you contain your downside so you can limit your drawdowns, then you can focus on the home runs. But you can't say, okay, I'm gonna, lock the front door to my house at night, but I'm gonna leave the backyard wide open.
Okay. So, talking about risk and risk management, why don't we get to the markets? And the guys in our trading room at TradeGateHub wanted me to give you a high five for ALB being up 13%, I believe, yesterday.
Yeah,
And
thank
in
you.
yeah, and in fact, one of my contemporaries that I work with there, you're on his curated X list, and he follows only the best. He doesn't follow 500 people,
Thank you.
maybe 50. So,
Thank you.
people are excited to have you here.
I
So why don't we
appreciate that.
do a little screen sharing and talk about the markets? I know that the big feature is Nvidia had bullish earnings and it was up sharply and it's getting hammered.
Yeah,
All the
let's
semis are getting
Oh
hammered.
yeah, let's go to screen share. And I've got plenty. So what's interesting is you look at this market, you look at the equal weight S&P today is up
Yeah,
a third of a percent, right? It's up 33 basis points. Then you take a look at triple Q, down 1.5%. The SOX,
yeah,
semis ETF, that's down 3.4. Now here's the thing though. If you look at this semis ETF, it's down 3.4% today, right? But
right.
it's up 18% year to date, so it's killing the market. It's killing the
I know.
NASDAQ 100. Yeah, and I got a ton of semis, so I'm having a drawdown today for sure, you know. But Nvidia put up a really big number, but the market, I think a lot has been baked into Nvidia. It's down 4.6% today, but if you look at the stock over the past 3 years, it's up 700%, right?
Yeah.
It's got a $4.5 trillion market cap. And I think, the market probably says, how much more. I think they put up 70% sales growth and 90% earnings growth. But the market says, well, they can't keep doing that. If you're a $4 trillion stock, you can't keep growing your sales and your earnings 70%. So listen, I've got a position in Nvidia and I've had Nvidia for a long time, but for the past 6 months, it's been, dead money.
And Larry, haven't they really tried to pump it? I mean, they made an exception for selling their chips to China. There's been all kinds of good news and stories about NVIDIA over the last few months.
Yeah,
It sounds like they really have, and then they top it off with earnings. And
yeah,
this is a great example for your work. Okay, so you're long NVIDIA,
yeah,
but I see all these moving averages converging around the lows today, and then nothing until maybe 176 or something like that. Where's your stop in NVIDIA?
I've got to take a look. I've had Nvidia for so long. I bought Nvidia in May 2023,
Yeah,
right?
yeah,
And then I've
I
had
see
it
it.
in the entire time except for maybe about 60 days I was out of it. So I'd have to take a look. I'm going to have multiple different stops on this position because I've bought it, at different time
Yeah,
frames. But
okay,
off the top of my head, I think my stop here is like 165, which
okay.
is underneath the 200 day. So, I think Nvidia, it's a stock I definitely want to hold it because it's 17 times forward earnings. The forward earnings versus the earnings growth, it doesn't make sense. I think Walmart's like 40 times forward PE, right?
I
But at
see.
the end of the day, this AI money, it's been going into memory stocks and
Yeah.
SanDisk and Micron. I mean, listen, there's a ton of semis. You look at a,
I know Larry at times I have a memory shortage.
yeah, yeah. But look, ASML,
Yeah.
look, the stock is up 35% year to date. Applied Materials is up
Yeah, they all are.
44. So there's still money going into semis, right? But I think the problem that Nvidia has is I think they're a victim of their own success, where
Yeah.
the stock is, 7x in 3 years. It's $4.5 trillion market cap. If you're going to buy a semiconductor stock today, do you buy Micron at 9 times earnings and a $400 billion market cap? Or do you buy Nvidia that's got 10 times? How high can Nvidia go from here? I think is what the market concern is. You see what I mean?
I do. I do. And so, I mean, this is one sector. It's one day does not a trend make,
Right.
right? But uh, there certainly is a lot of euphoria because of everyone knows about a memory shortage now.
Yeah, yeah.
It,
Everyone knows it. The market's priced it in. But if you look at some of these stocks, they're going to be volatile. Like Western Digital, I've had Western Digital since $200, right? So it's been a nice stock, but it's still over that 50-day. So
yeah.
I know on these stocks like, Western Digital and SanDisk,
Yeah, I
these,
was just going to ask you about SanDisk because I think SanDisk, and you're only going back a year.
yeah,
Okay, you go back all the way back to
yeah,
May.
they got
W-
spun off.
Okay, because it's a 20-fold increase.
Yeah, they got
And
spun
and
off.
that chart right there looks pretty parabolic to me.
Yeah, it does. The question is, if you go back and you look at, let's say, Palantir, right?
Yeah.
When Tesla and Nvidia, when they went on their big runs, those charts were parabolic for a while,
Yeah, like
So
silver was.
yeah, yeah,
Was.
yeah. It went up. What did it go up like 6 or 7x? The
Yeah,
difference is
silver. Yeah.
so with SanDisk, there's a lot of good news that's priced in, but what I'm looking at here, it's over five
Yeah.
rising daily moving averages. The 50 days down about 440 or so. So I got fortunate here. I bought SanDisk at about 585, right? And then
Yeah.
so I bought it in here. And then like 3 days later, it went to 725. So I felt really smart. And then a week later it was down at 540. I didn't feel so smart. But listen, these stocks, SanDisk, Micron, Western Digital, they trade in about an 8 to a 10% daily
Yeah.
range. So
Right.
you should expect if you're holding SanDisk,
Yeah.
one day you might be up 8%, you might be down 10% the next day. So, they're not for the faint of heart. But I've got, yeah, I don't know, 30% of my money's in tech, right? But
Okay.
I've got the oil stocks. What I
Yeah.
do like about what I do, trend following, is I go wherever the
The
charts,
action is.
right. So I've got energy stocks, I've got these rare earth stocks,
They've
right?
been on fire. Yeah.
I've got the gold miners, I've got Newmont. So
And you add you I saw you tweet that we had a major breakout in Freeport yesterday.
yeah, I bought some Freeport a couple weeks ago, So this Freeport chart that's breaking out to new all-time
Yeah.
highs, clearing
Yeah.
over what's that, 2008. That's
Yeah.
a pretty big base. That's what
Yeah. That's a
18
hell of a
years.
signal. Yeah.
Yeah. So
It
I'm
measures huge.
yeah, I'm not just in tech,
Yeah.
right? I've
Yeah.
got I've got the commodities. I've got stocks like GE Vernova, which is in the industrial sector. So it's that's what saves me a little bit is that even on a day like today, well, pretty much everything is selling off today, right?
Right. It's a red day.
But if you've had just the Mag 7 and software, it's been a really tough year for people. But if
That's right.
you've got,
Oil's been a star.
yeah, if you've got the energy stocks, I got into Exxon at 115. If I started buying the energy stocks, and this looks like it might pull back some more, but I started buying the energy
End
stocks
of the
in
year.
in November.
Yeah, nice.
And the only reason was because the charts kept giving me buy signals, right? And I didn't, I was like, why am I going to buy? Because energy stocks did nothing for a long time. And then I got fortunate, that they all broke out. But yeah, you're going to have winners and losers, but the rule. If you have more winners than losers, and your winners on average are bigger than your losers, and you don't blow yourself up, you should make money.
Well, Larry, just why don't we wrap it with something that might be beginning to happen? You have a view on TLT?
So TLT, I don't do anything with TLT because in the past, I haven't really made a lot of money at it. But yeah,
Okay.
TLT it's showing some signs of trying to build a base,
Yeah.
right? If you take a look at where it is, you've
That's a
got
long
support.
term, that's a long-term base, if it is a
Yeah,
base. Yeah.
yeah. You've got support 84 to 90. I'm
Yeah.
sorry, 84 to 86.
Yeah.
The only thing when I look at TLT is when I take a position, I ask myself, how much money can I expect to make?
Yeah,
Right?
you're right. So
And,
even a
and
big move with the kind of moves you've had in these other stocks,
right.
a move to even 120 is only 30%.
But hey,
That's
I'll take 30%. I would take
uh,
30%. But if I was looking here, I'd probably look at something like, the levered ETF, like the TMF or something like
okay.
that. But traditionally, I've not done really good with the TLT trade. So, I for me to
Yeah,
really get interested, because if you look at it, you
it's not
would
nothing.
need yeah, but I mean, you would need 10-year, actually 30-year yields. So you'd need longer term yields to really crater. And if we hit a recession or something, it could do great. But for me to get involved from like a trend perspective level, I'd probably need this to break out over 102, which,
Okay.
probably sounds stupid to a lot of people. You're like, why would you buy it higher? But because of what I do, where I buy trend breakouts, for me to avoid getting stuck in all this, mishmash for 2 years, right?
Yeah.
For me to avoid getting stuck in all that, I usually set my buy point higher and say, at what point on this chart does the trend really change? And just by looking at it, 102 is where I'd probably get interested. Because, like you said, even if it goes to 120 or 130 or 140, it could go anywhere, right?
Yeah.
But it's got to clear 102 before it can get to that. I posted
That's right.
Exxon, if you go back on my Twitter a couple months ago when I was buying this Exxon position, I was watching it trade in this, it was in a 3-year trading range,
Yeah.
right? And you just
Yeah.
get stuck and get stuck and get stuck. So I made my first buy at 115, which was right in the middle of, the trading range. But it broke out one day. I forget what it was. It might have been Venezuela, and there was some type of a news
Yeah.
event where it
That
broke
was
out.
Venezuela.
Yeah,
Venezuela.
I think it was right here, right? So
Yeah.
I bought that breakout and I was wrong for about 3 days. But as soon as the stock cleared like 125, I realized that that's my bot that, that big breakout buy signal was the breakout over all that noise.
Yeah.
So I bought that break. So yeah, just looking at this chart,
Keep it simple.
I'm pretty sure I bought this bar right here, right? Which was the breakout over the top of all that. So I bought, that was my second buy right there. And then it came down for a couple days, right? And then it shot up. So,
You
you
ever
know,
take partials?
all the time, all the time.
All
I
right, there's another. Yeah.
I did, I
So,
did, I did take some partials in Exxon a couple weeks ago. But when
yeah.
I take partials, I'm usually not selling. If it's a big winner, I might sell 10% or
Okay.
20%. But I'm
Right.
not going, I'm not looking to sell Exxon, after a big move, get out of it entirely,
Right.
and then have to start over somewhere else. But a
Yeah.
stock like Valero, because we're talking about all the stuff that did happen. your viewers probably want to hear something that could happen right now, right? So Valero, this is a favorite idea right here. That's a beautiful chart. I've got a position here, I think from 180 or so. But if you look at that base at 190, right?
Yeah,
It consolidated, so it broke out and now it's consolidating over 190 and it's just below a breakout. It needs maybe 206, 207. But this is a stock. If I was going to buy a stock right now, Valero is a stock I could buy right now because I think that looks ready to break out higher just where it sits. Just to shift gears for a second, Dollar General. And people say, well, hey, you can't make money in discount stores. It's up 16% year to date. It's up 100% over the past year. It's still, well off the highs. But if you take a look at that daily chart, right?
yeah,
150, it's just consolidating. These are my types of charts where I get a chart that's consolidating in the upper right-hand corner. It's hanging just below our breakout level. To me, these are the ideal types of charts that I look to put money into because it's already, it's knocking on the door, right? The market's down almost 1%, the S&P. Dollar General's higher. It's higher year to date. And Dale, it doesn't matter to me if we can make money in tobacco stocks or memory stocks or Chinese stocks. It doesn't really matter to me.
yeah.
It's just what the chart is.
That's it. The only difference is beta and the title,
Right. Right. And,
right?
and once you
You
get into
trade
these
them all the
trends,
same.
yeah, they're all the same. The volatility might determine, position sizing and stop placement, and all those things. But like a stock like ASML, I think this stock is fine, right where it sits. It's up 35% for the year. So yeah, there's going to be days where it's down 5%,
Yeah,
right? But it's over a breakout line, it's over the 50-day. I think that these semiconductor stocks and I think that these memory stocks are going to be higher, you know, 2 months, 3 months from now. That's how I read the charts. I could be wrong. And if I'm wrong, I'll get stopped out and I'll reevaluate.
Larry's a pro. Larry, where could people, get in touch with you besides X? You want to show your website?
Yeah, two places. So X at Blue Chip Daily, I post on there all the time. And then my website, bluechipdaily.com. And basically what I do every day is the same thing that you and I are talking about, right? But I do it for
Yeah,
subscribers. So I post every single day, I post a chart of the day idea, which is basically my best idea right now. Anytime I buy or sell a stock, members get notified right away. I notify them before I actually make the buy. So if I'm going to buy Valero today, you're going to get an email and a text message and a post on Twitter that says I'm buying Valero, and then I'll go
okay.
buy Valero. So I'm not one of these guys that's going to buy it and then tell my subscribers, tomorrow, oh yeah, I bought that stock yesterday, right? And
Yeah,
now it's up 5% today. I tell them before I make the actual buy. And, so if I'm right or wrong or whatever, but they know, I don't want to be a guy that says, hey, I bought Micron stock, a month ago and
yeah.
then tell my subscribers about it. So we have some winners, we have some losers. We do have more winners than losers, and the winners are bigger than the losers. So, but that's yeah, the website.
Okay.
I share this every day. I do a quick video every night for subscribers. We've got monthly memberships they can cancel anytime, but it's we have a really good community. We've got about 800 subscribers or so. We got a really nice community, and it's business has been good.
Congratulations, Larry. And I do. I'm so glad our paths crossed. We got to know each other, and always enjoy having to talk with you. And I really enjoyed hearing your story and
Dale,
what you went through. So,
Thank you. It was, it's we talk about it. It's I don't know an athlete. Let's say you're the heavyweight champion of the world, right? People only see the success. Or, you're the look at Sam Darnold, right? I don't know how many,
yeah,
we're all football fans. Sam Darnold got cut from what, four teams?
yeah,
The Jets said he was no good. The Panthers said he was no good. This is a guy that, some of the worst teams in football said he wasn't good enough. And then the guy goes on and he wins the Super Bowl. And whether people think Sam Darnold is, you know, the next Joe Montana or he's not the next Joe Montana, people see the success, but they don't see the 20 years of, right, the grind and getting
Yeah.
beat up and failing and, losing money and getting cut from football teams. So it's like
Yeah.
any athlete, the heavyweight champ of the world has gotten punched in the face, he's gotten knocked down. As traders and investors, the most important thing we can do is try to learn to manage ourselves
Yeah.
because you
Yeah.
can't control the market. Micron's down 4% today, right?
Yeah.
You can't control that, but you can control, when you hit that buy and sell button and how you let your emotions get in charge of you or not.
Yeah. Talking about boxing, I actually went to the Rocky Balboa Trading Academy.
Yeah, yeah, how'd that work out? You
Well,
get
yeah, to qualify, you have to learn how to take a hit, go down to the canvas and get up and be
yeah.
ready to fight. And keep your dukes up, Larry. Keep them up, bro.
Dale, let's go.
All right, so Larry Tantarelli, everyone. Um, Include him in your intelligence gathering, just like Mike does. And I think that you're going to be happy with a lot of the ideas. And never trade anything blindly, even if you subscribe to somebody.
Right.
If you want to learn how to trade, you ever teach people the hows and whys like you do right here, how you do it, so that one day when you're retired on an island, they'll know how to do what you did.
Dale, great advice. And as always, thank you for having me on, my
All
friend.
right. All right, Larry. Good seeing you, buddy.
Take care.
Talk to you down the road.
Will do. Thank you,
Larry,
Dale.
all right, Larry Tentarelli, everyone. Follow him at Blue Chip Daily on X. Go to his website and get on board. See you, buddy.
Thank you, Dale. Take care, everyone.